This is our 52-week Wednesday webinar series. It's for home buyers, it's for homeowners, it's for people that are thinking about purchasing a home or any property, land, and all of the things. We talk about everything from different loan types, inspections, appraisals, what to expect from contract to the closing table. We are on week 16 today. Oh, so 16 Wednesdays we have met, and we're just getting started, I feel. Today is going to be all about closing costs in Texas. We're going to break down closing costs. Our goal is that at the end of this webinar, for you to understand closing costs better. If any questions arise as we are going through the presentation, you can take yourself off of mute, you can interrupt us, or you can wait to the end where we do our questions and answers. So it's totally up to you. We don't have just like a strict flow. Right now we're still able, because our numbers are still, lower than 20, we're still able to kind of be free flowing with the format. So today we are talking all about closing costs. Again, week 16 of our series. For those of you who don't know, I'm Daphne Brown, broker owner of Beyond the Home Realty. Today we're going to take the deep dive. This is one of the most misunderstood parts of buying or selling a property: closing costs. So by the end of the session, again, we hope that you walk away with what you need to know, what's negotiable, how to keep more money in your pocket, all of the things. So we're covering closing costs for buyers, closing costs for sellers, how to read your loan estimate and your closing disclosure, loan type comparisons, Texas down payment assistance programs, and some real money saving strategies. Again, we'll also have that Q&A at the end, so you can go ahead and start thinking of any questions you may have. All right. So closing costs are the fees and expenses on top of the purchase of the home. The closing costs are what actually completes the transaction. So think of it like this. We have a purchase price on a property that is $300,000. Okay. That's going to be the example that we consistently use throughout today's webinar. The purchase price gets you the house, but the closing costs get you to the closing table. So in Texas, buyers typically pay between 2 and 5% of the loan amount in closing costs. So on that $300,000 home with the 5% down payment, the loan is $285,000, meaning you could pay anywhere from $5,700 to $14,250 in closing costs. Sellers in Texas typically pay more, and they're going to pay typically between 6 and 10% of the sales price. So on a $300,000 home, that's about $18,000 to $30,000 coming out of the seller's proceeds. I know these numbers can feel overwhelming, and that's exactly why we're here. We're going to break it all down so that there are no surprises. This is what your lender charges to process the mortgage application, which is the loan origination fee. It typically runs 0.5% to 1% of the loan amount. So on our $285,000 example loan, that's about $1,425 to just over $2,800. So this is sometimes negotiable, especially if you are a strong borrower. The lender is going to require this to make sure the home is actually worth what you're paying. In today's Texas market, you can expect to pay anywhere from $500 to $800 for an appraisal, and it's usually paid upfront before closing. Sometimes you can get it rolled into part of the closing costs that you bring to closing, but most of the time, I'm going to say 90% of the time, is paid upfront. Moving to the credit report fee. Now, this number has skyrocketed, and this had Greg and I on the phone earlier today, because credit pulls used to be like $75. Well, they're no longer that. Just like gas, just like groceries, that number has gone up, and then it just gets passed onto the buyer. So the lender pulls your credit history from all three credit bureaus, Equifax, Experian, and TransUnion. We talked about those in previous webinars. If you didn't check those out, we do have a playlist for you to check out past webinars. But this is the amount that it is, and this is a high number, right? Sometimes get a small discount if it is a joint application for mortgage. And then you have the lender's title insurance. This protects your lender if someone challenges ownership of the property. The buyer pays for it, but it covers the lender. And it's typically, for this example, because remember, all of these numbers are based on a $285,000 loan, okay? $300,000 sales price, and they put their money down, and so now they're financing 285. That's what we base these numbers on. But the lender's title policy on said loan, for example, is about $700 to $1,200. And then you have your owner's title insurance. This protects you, the buyer. If a long lost heir shows up claiming rights to the property, this policy is what's going to have your back. So again, for 285, it runs about $800 to $2,000 or more, depending on, the purchase price. In Texas, the seller customarily pays for this, but it is always negotiable. When you're looking at a contract, anything with a line on it, under it, is typically going to be negotiable, okay? And then moving down, we have the escrow settlement fee. This goes to the title company for managing the whole transaction, for managing all the money, the documents, and the coordination of closing. This is what they're paid. Everybody got to get paid. Nobody works for free, okay? So you want to budget for this particular fee somewhere around $350 to $700. And then you have your home inspection fee. Now, remember, this is typically, you won't see this on your closing cost sheet because this is something that you pay in advance, right? So I always say, always get a home inspection, because it is money extremely well spent. So you're spending potentially hundreds of thousands of dollars on the property. And so $450 to $650 to know the condition of the property is a non-negotiable, in my opinion. Now we're going to go deeper on three key categories that confuse most buyers, okay? Now, I want to spend a little time on title insurance, because there are two types of policies that people often get confused. Lender's policy protects the lender. The owner's policy protects you as the buyer, as we just said. Okay, in Texas, the seller customarily pays the owner's title policy, but you need to know this going in so it's in your contract. I negotiate this for all of my buyer clients. The title company in Texas is basically a neutral third party in a transaction. They hold the earnest money, they prepare the closing documents, they coordinate with the lender, they collect and they disperse all the funds, and they record the deed. They're doing a lot of work, okay, to be honest. So, the little money that they're going to get, they absolutely deserve it. It's justified, in my opinion, okay? So that's the escrow services. Now, survey costs. We know, because we were here in past weekly webinars, that the survey establishes the exact property boundaries. If the seller has an existing recent survey, you may be able to use it, and you may be able to save yourself a couple $100 there if you can just reuse theirs. But always ask. And I put this in my buyer contracts as a standard negotiation. So now we are moving on to seller's closing costs. This is an overview, but even if you're a buyer, you still want to know, if you nosy like me, what's going on the other side. So you want to know what the sellers are paying for as well. But if you are a seller, here is a section specifically for sellers. So we're shifting gears a little bit. Now, this section often surprises people, because as a seller, you need to understand your net sheet before you accept any offer. So for us, the homegirls at Beyond the Home Realty, when we are sending an offer, on top of that offer is a seller net sheet. So they know what is included in that whole contract that is broken down, okay? Now, Again, as we stated, sellers in Texas typically walk away with 6 to 10% less than the sales price after closing costs because they do have to pay closing costs. So here's a breakdown. The real estate compensation, that is negotiable, okay? Gone are the days of set commission rates. Under the new real estate rules, compensation is negotiated. Make sure you fully understand what you're agreeing to with your agent before signing anything, okay? Now, let's not get crazy, but we do have a conversation because it is negotiable, okay? Now, on the owner's title policy, as we mentioned before, sellers in Texas customarily pay the buyer's owner's title policy. So a seller can budget between $800 to $2,500 on this, depending on the sales price of the home. In Texas, property taxes are paid in arrears. So we're talking about tax prorations right now. So at the end of the year, property taxes are paid. If a seller were to sell in March, the seller would owe the buyer a credit for the share of that year's taxes up to the closing date. This varies significantly based on the county that you're in and when you close. Now, for the HOA transfer fee, most of these new communities popping up are in HOAs. So if your home is in an HOA, expect to pay anywhere from $1,000 to $1,500 to transfer membership to the new buyer to get it out of your name and into the new buyer's name. Some HOAs also charge a resale certificate fee, and that's separate, okay? As for the home warranty, many sellers offer a home warranty as an incentive to buyers. This is one of our tricks in the bag that we pull out. When a seller comes to us, they're like, what do I need to do to sell really fast? There are a couple things that we advise them to do. And especially if you're selling in a new home community, meaning you're selling in a community that other homes are continuously being built, a home warranty can be very attractive to a buyer. It will cover systems and appliances for a year and can make your home more competitive. Again, especially if you're in an area where a lot of homes are for sale, or if you're in an area where they're still building new construction. Because on the new construction homes, you know that you already get a home warranty. And then the repair costs, the repair credits. After the inspection, buyers often negotiate credits for repairs. This is not a fixed cost, but budget for it, okay? It is something that I always counsel my sellers to address. This is another reason why your seller net sheet is so important. Before you accept an offer, make sure that your realtor of choice is calculating the net proceeds so you know exactly what you're walking away with and there are no surprises. All right. Any questions so far? Okay. All right. So, there are professional fees involved in closing. So for the title search, before anyone can close on a property, a title company searches public records going back many years to make sure that the title on the property that a buyer wants to purchase is clean. So they look for things like unpaid liens, judgments, divorces, tax issues, or any ownership disputes. And if something pops up, it has to be resolved before closing so that the buyer is getting a clean title, okay? If things come back where the seller has a tax lien or hasn't resolved child support issues or things like that, then that could be something that holds up, closing. But as a buyer, you will want to know that before you give all your money to buy this home. For the origination fee, this is the lender's main profit center on a loan, okay? Now, you can ask your lender if you have excellent credit or you're putting down a larger down payment if there's room for negotiation there. But typically, they're going to give you their fees and the fees are going to be the fees, okay? Now, discount points. Paying points means you're prepaying your interest to buy down your rate. 1 point equals 1% of the loan. So if you're planning to stay in your home long term, buying down your rate could save you significantly over 30 years. I can connect you with lenders. We have Greg on the webinar right now, and he can run numbers for you to see if this is something that works in your favor. Again, if you're someone who moves every 2, 3, 4 years, we can run the scenarios to see. Now, the underwriting fee is a fee that the lender charges to evaluate your loan file and to confirm that you meet their criteria. It's largely non-negotiable, but this is why I tell my clients to shop more than one lender just to make sure that their dollar is being stretched as far as possible. But you can't just look at one section. You got to look at the whole picture, right? You want to make sure you're looking at everything. So now let's talk about who pays what. This is the most important thing that I want you to take away about closing costs. Almost everything is negotiable, okay? So now, seller concessions. Buyers can ask the seller to pay some or all of their closing costs. That is what a seller concession or a seller contribution is. When the seller gives you money to pay some or all of your closing costs. It is important for me to let you know, lenders do cap these. So typically 3% for conventional loans with less than 10% down. Greg, is that right?
Yeah.
Okay. 6% with more money down. FHA allows up to 6%. VA allows up to 4%. But if you're tight on cash, this strategy can be a game changer. You can also negotiate with your lender for credits towards closing costs in exchange for a slightly higher interest rate for money that you can use towards your closing costs. But again, it's all on a case-by-case basis because you have to make sure that you're still staying within the DTI ratio. All right.
I was going to say you still need to qualify.
You still need to qualify. You still need to qualify. Okay, so you can shop your services. Title search, title insurance, escrow fees, and surveys are all services you can shop for. And we'll see that here in just a second on the actual document I'm going to show you. But different title companies and service providers do charge different rates. I do want to say that typically when we're comparing loans, FHA loans, we've talked about this at length in prior webinars, but FHA loans are government-backed loans and they're more flexible, okay? So you need as little as 3.5% down and your credit score can be as low as 580. That's not to say if your credit score is 580, you're going to automatically be approved. It depends. One of the things we just talked about was your debt to income, okay? But some lenders can work with credit scores as low as 580. However, FHA does charge an upfront mortgage insurance premium of 1.75% of the loan amount. So on that example we talked about, on a $285,000 loan, that's nearly $5,000 added to your closing costs or financed into the loan. Plus, you're going to pay monthly mortgage insurance for the life of the loan if you put less than 10% down. On a conventional loan, generally you need at least 3% down, but conventional loans require higher credit scores. We talked about that in previous episodes. What is the credit score required for a conventional loan right now, Greg?
620.
620. So 620 or above to qualify for a conventional. If you have a credit score of 740 plus, you have access to the best rates, okay? Conventional loans have no upfront MIP, and the PMI can be removed. Check this, once you reach 20% equity into the property. All you have to do is call. You don't have to refinance. All you have to do is call. They're going to ask you to get an appraisal, right, Greg?
Yep.
Okay. So you'll get an appraisal done on the property to verify that you have 20% equity into the home, and then that can be pulled right away. So that'll save you. This can actually be less expensive overall for buyers with good credit. Conventional loans can be a good option. The FHA loan is easier to qualify for. Conventional can save you money long term if you qualify. The right choice depends entirely on your situation, which is why I always connect my buyers with a lender who will go over each of the loan products and show a buyer which loan product is best for them. My loan product may be different than what you qualify for because it all depends on so much. And so Greg is really good about determining, hey, this is going to be the best loan product for you. Greg, you have anything to
Well,
add there?
uh, you know, not everybody's a veteran, but there's no better loan. But
Amen.
yes, outside of that, we will figure it out. You know, FHA is oftentimes one of the best choices. I mean,
Hmm.
even when you have really good credit, right? W- working on one or two right now and closed one recently where, I mean, they all were in the 770s, and they've all had considerable amount of money for a down payment. They just, you know, not enough to put 20% down, right? So they're going to have PMI either way. But when you looked at it with the the lower down payment and the lower interest rate, it made the most sense. So, but again, it's case by case. So,
So, good segue into the VA loans. If you are a veteran or active duty military, VA loans offer zero down payment, no monthly PMI, and typically lower interest rates. The VA does charge a funding fee that varies based on service history and whether it's your first VA loan, but it can often be financed into the loan. This is one of the most powerful benefits available to veterans, and I encourage any veteran to explore it fully. Do not leave your entitlement unused. Greg, how many times have you seen veterans that just won't use their VA entitlement for their loan?
um, I I usually see them when they're doing it with me, but a lot of times it's their
Well,
first
yeah.
time, and it's
Yeah.
their second or third home, and they've bought conventional in the past, and I'm like, why?
Why
I
didn't you
don't
use it?
understand.
Yeah. Right. I don't understand that either. It's getting better now. But I think before I asked veterans before, like, well, why haven't you used your entitlement? Some say that it was just too hard, too much, red tape to work through. But yeah, I'm like, you worked for that. You served. You should use it. It's a lot of benefits.
Yeah, it's honestly the easiest loan to qualify for. I mean, maybe they had trouble getting their certificate of eligibility,
Yeah.
which,
I think
but
that's where the rate
outside of
came
that,
in.
I can't understand why, you know.
Yeah, I think that's kind of where the issues were. Okay, so we talked about FHA, conventional VA. Now let's talk about USDA loans. So our area, the Brazoria County area, a lot of the communities in Brazoria actually qualify for USDA rural development loans. That means zero down payment for eligible buyers in eligible areas. But the key is eligible areas. There is a 1% guarantee fee up front and a 0.35 annual fee, but no traditional down payment is required. And again, I can help you check to see if an area you want to purchase in is eligible for USDA loans. Okay, so that is that. Those are all the loan types. And again, if you need more information on these loan types, we did a webinar 3, 4 weeks ago that we went in depth into each of those loans. So this is our down payment section. And this section generates a lot of interest most times, okay? Because I have buyers coming to me like, I need, down payment assistance. And I want people to understand that yes, it is available. They have grants until the account from which they're pulling this money is depleted. And there's really no such thing as free okay. So when you do get a grant or any down payment assistance, even a loan, interest rate is going to be higher than the market rate because they need to tack on a little extra so they can get that money from you, put it back in the account, to replenish it so that it's available to other people. So Texas does have some incredibly powerful down payment assistance programs. And a lot of buyers have never heard of most of them. So there's the TSAHC program. This is a grant that offers up to 5% of the loan amount to help with down payment and closing costs. The word grant is important because this is not a loan. You don't pay it back, but you do have to qualify for it. And eligibility is based on income limits, and the home must be your primary residence. There are programs specifically for educators, veterans, first responders, as well as programs for all types of buyers. But again, keep in mind that the interest rate is going to always be higher than the market rate. Then we have the TDHCA, the Texas Department of Housing and Community Affairs. They provide grants for first-time home buyers to cover costs as well. Now, this program is offered to first-time home buyers, and the Texas Mortgage Credit Certificate program is offered in conjunction with this. And so these two together provide down payment and closing cost assistance as a low interest loan, plus potential tax credits on your federal taxes. For a first-time home buyer, combining these programs can be transformative. But again, you do have to qualify. They do have income limits that vary county to county and also by household size. But many of the clients that I've talked to are always surprised to find out that they do qualify. The limits on these loans are higher than people expect as well, but you do have to qualify. These programs can be accessed through approved lenders. Not every lender offers these, okay? But as your agent, I can connect you with lenders in our area who are certified in these programs and can walk you through the full eligibility list, okay? To show you how you can access these. All right. So now let's move on to the loan estimate and the service providers. Now, within 3 business days of submitting a loan application, your lender is required by federal law to provide you with a loan estimate. This is a standardized 3-page document, and it's incredibly powerful if you know how to read it. Page 1 is going to show the loan amount, the interest rate, and it is also going to tell you whether this loan is fixed or adjustable. This is going to be where you start, the loan amount and the interest rate, okay? And now you'll be able to see some of those. This is your closing disclosure. So section A, see if I can make that bigger, is showing you what your lender is charging to make the loan. This is the most important section to compare when shopping multiple lenders. These fees go directly to the lender. These are your origination charges. Okay. Section C, this was a buyer who wanted to shop their rates. And so they just kind of gave them this. They purchased a new home and they were wanting to see what the preferred lender's fees were. And then they wanted to do an outside lender. So they went to their credit union and they want to be able to have this. Section A, I'm sorry, is going to show you the origination charges. Let's see. Okay, section C, like I said, it's not filled in here, but this will list services that you can shop for. So you would see here, title search, title insurance, settlement fees, and a survey. This is where you have, as a buyer, real power to save money, okay, because you can compare providers. Don't just accept what you see, because again, you see here, services borrower could shop for, okay, and what you did not shop for. So you do have the power to control some of this, but you got to look at the whole picture. Again, don't just look at one section and go, oh, I can save $300 here. What does the rest of the stuff say, right? So you got to understand that. And then section F covers prepaids, things like homeowners insurance and prepaid interest. And then section G covers your initial escrow setup. This is where you're funding your escrow account for property taxes and homeowners insurance. Okay. These are real costs that you'll often see catch people off guard in this prepaid section. Okay. And then page one at the bottom, let me see. This is the estimated total monthly payment, including principal, interest, taxes, insurance, and any mortgage insurance. So make sure that this fits your budget before you go any further. This is your total monthly payment. Let's see. Let me see. Hold on. Let's see. Okay, right here. All right. Your total monthly payment. Make sure that fits within your budget. Okay. All right. Now, this is how you are going to read your closing disclosure. Within 3 days of submitting an application, the lender has to give you your loan estimate, and within 3 business days before you close, you receive your closing disclosure. This is most of the time as close to the numbers as you're going to get, right? Sometimes you got late stuff that happens, like Greg was just talking about if you were on the call prior to this meeting started. Sometimes you have little things pop up, but at least 3 days before closing, you're going to get your closing disclosure with your numbers a little bit more true and more accurate to what you need to bring. Okay. And then federal law gives you 3 days to review this before you sign it. Okay. So that is why sometimes a lender will say, well, go ahead and sign it. You're not committing to anything, but it has to be documented that you've had 3 days to review it. Sign it. We'll look it over. We'll explain it to you so you understand it. But if you hold off signing this, you could hold, no, you will hold up your closing for sure. Okay. Because they do not play about the law. They just don't. They just do not.
Yeah, we can always fix those things, Daphne, but we got to start the clock.
Got to start the clock. Tick tock, tick tock.
And that's what I tell people at the beginning too with the loan estimate, right? Because by the time we put our loan estimate out, it's like we have the contract, right? So I'm like,
Mhm.
if you don't, I'm like, these numbers are not accurate. They're high. They're estimated high intentionally. If you don't sign these, I can't put your loan into underwriting and I cannot order your appraisal. So you've already said you want to buy the house. You've already been pre-approved. Now we have to get started.
Yeah. It's important because, again, like you said, the clock has to start. Several times conversations continue, but if you want to meet your closing date, then that is the requirement. Did I leave
Yeah,
anything out in that section?
I don't think so.
Okay. All right. Okay. I do want to make it plain, simple, and clear that the closing disclosure mirrors the loan estimate format. Your job is to compare them side by side. Most fees should be within tolerance of what was originally estimated. If something has changed significantly, you need to call your lender and have that conversation. Also, you want to check the loan amount, the interest rate, and the monthly payment, as well as the cash to close figures and any fees that seem new or different from the loan estimate. So you're going to look for cash to close, which is the total that you need to bring to the closing table via certified funds or wire transfer. This includes down payment and all closing costs minus any of the credits. Okay. So if I'm telling you that your down payment on a home that is what we use, for example, 300,000, right? So if I'm saying that your down payment on that is 10.5, and then I don't, some buyers automatically think that's all I need to bring to closing. No, no, no. That's your down payment, which you can receive gift funds for, right? But you're going to have your down payment plus your closing costs equals your cash to close. Okay. All right. I think I did a fairly decent job with explaining all of that. Okay. So we're going to move on to 10 ways to save, okay? Because we want to make sure that you are saving money as much as possible because now that you're moving into this house, I'm telling you, you're going to want to buy every single thing under the sun, okay? So there are 10 ways to save. You can get loan estimates, okay? Compare at least three for your loan estimates. I can't stress this enough, all right? Please do that. I always tell people, go to your financial institution. I will tell you though that some of these financial institutions like Bank of America, like Wells Fargo, they're so tight with their approvals that sometimes they could tell you no, but you could easily go to another lender and get a yes. I've seen it. I've been involved in it. Yes, you definitely can. Okay. So shopping lenders. And then if you close at the end of the month, I know it says close late, but close for if you aim to close at the end of the month, you can save money. Your prepaid daily interest runs from your closing date to the end of the month. So if you close on the 28th instead of the 5th, you're only paying 2 or 3 days of interest instead of 25 days of interest left that whatever's left in that month. So on a $285,000 loan at 7%, that's a meaningful difference. And then lender credits can save you money. If you accept a slightly higher interest rate, like we talked about earlier, your lender may give you a credit towards closing costs. If you're not planning to stay in the home long, this is often a smart trade-off. And then you can negotiate seller concessions. Ask the seller, whether it's a individual or a builder, to contribute towards your closing costs as part of your offer. If you're in a buyer's market, which in most parts of Houston we are in, this is very effective. Even in competitive markets, you can structure the offer to include concessions. Now, let me tell you this. On that $300,000, I got to write it down. On that $300,000 home that we talked about, okay, we know that your down payment is 10.5. If your seller, whether it's a builder or an individual, is offering you $15,000 in closing costs, okay? They're saying, I'll give you 15,000 in closing costs. But let's just say your closing costs are only, because remember, down payment, that's yours. You know, you can get gift funds, but a seller cannot help you with your down payment. That's yours. That belongs to a buyer. Let's say your closing costs, for the sake of easy math, are 10,000, okay? But the seller said they give you 15. Well, it's $5,000 just sitting out there that you're not, and this really did happen to us, Greg, right? Just a couple months ago. And so there's $5,000 just sitting out there. I don't like my clients, my buyers to leave money on the table at all. I'm talking we coming for it all. So it was $5,000 left. I think that was like our real situation. And so we didn't want to leave that money there. The buyer took as much of the seller concessions as their loan allowed, but we still had money left. So then what I did is I went back to the seller and I said, okay, we have $5,000 left. Can we use it to bring the price of the home down? So you can do things like that. In most cases, it just depends on how down to the wire we are. You can also ask for appliances to take, up the rest of that money. When you see builders say we are offering up to 20,000, most of the times you're not going to get all that money. So I like to say, if I see an up to, I like to say any money that we don't use, we can use elsewhere at our discretion. So if that's appliances, blinds, upgrades, whatever, we always go that route. So that's something to keep in mind. Greg, you have anything to add to that?
You could apply it to, bring down the price, or you could apply it to like a rate buy down.
Yeah. All right. And then also, so we talked about lender credits, also seller concessions. We talked about that. You can also save money. A buyer can save money if they were to use an existing survey, if they could. Title is the one who approves the survey, whether or not you can use the survey. They're the ones that green lights that. So if you use an existing survey, you can save yourself a couple $100 there, anywhere from 400 to 600. And then we already talked about down payment programs that can help you. All right, we're almost done, guys. We're almost done. So, understanding down payment versus closing costs. This is a major financial benefit for Texas homeowners. And one reason people are still relocating to Texas in large amounts, large droves, is we're no state income tax. Okay. So that is a big reason. Like I said, people are relocating here. Also in Texas, there's a no real estate transfer tax. Texas does not charge a transfer tax when property changes hands. This saves buyers and sellers money compared to states like California or New York. Also, in Texas, buyer contracts include an option period, typically 5 to 10 days, typical, but it's negotiable. During that time, a buyer can terminate for any reason. Okay, you pay an option fee to have this right to terminate, and so that's negotiated in your option period, in your offer rather. And then you have the homestead exemption, which once you close, you want to file immediately. We bring our clients the homestead exemption form to closing so they have it there. This reduces your taxable property value and saves hundreds of dollars per year in property taxes. In Texas, you must own and occupy your property as your primary residence in order to qualify and be approved for this homestead exemption. Now, here's some costly mistakes that people make at closing. If a lender quotes you fees verbally, you want to ask for a written loan estimate. We just talked about you get that within 3 days, 3 business days. Verbal quotes are not binding. Okay. Written loan estimates are. So always get your loan estimate in writing. Do not open any new credit, no credit changes. No new credit cards, no car loans, no furniture, nothing. Any new credit inquiry or new debt can change your debt to income ratio and literally kill your loan approval days before closing. I've seen it happen. We talked about it early in week 2 or 3 in our webinar. And then wire fraud. This is critical. Real estate wire fraud is one of the most common and devastating financial crimes targeting home buyers. Criminals will hack into email chains and send you fake wire instructions. So always, and I mean always, like ALWAYS, always call your title company directly at the phone number that you independently verified to confirm wire instructions before sending any money. Okay. And then budget for prepaids. When you fail to budget for prepaids, you run into a lot of last minute headache. First time buyers are often blindsided by prepaids. The upfront homeowners insurance premium and the initial escrow deposits for taxes and insurance are the prepaids. These can add $3,000 to $5,000 to your cash needed at closing. So budget for prepaids. And when you receive your closing disclosure, review it. Review it line by line. Call me, we'll review it. We can get the lender on the line to review it. We want to answer any questions immediately. There's no time to wait once we get to this point. And again, title company fees. In Texas, you have the right to choose your title company. Don't automatically use whoever is suggested just because they suggested it. Ask questions, get some quotes. Fees can vary a lot. Okay. All right. Now, for the key information for buyers and sellers, a quick recap. Okay. Buyers typically pay the loan origination. Okay. The appraisal, the credit report, the lender's title insurance, the escrow fee, the survey, the home inspection, the prepaid homeowners insurance, property tax reserves, and recording fees. So you want to budget, again, anywhere between 2 to 5% of the loan amount. Sellers are typically going to pay the real estate compensation, although it's negotiable. Okay, the owner's title policy, tax prorations, HOA transfer fees, the mortgage payoff, and the home warranty. Again, that's negotiable. But for sellers, I always advise to budget 6 to 10% of the sales price. And keep in mind, these are starting points. A good agent, like the homegirls at Beyond the Home Realty, we negotiate many of these items. And our job is to make sure our clients keep as much money in their pocket as possible, whether I'm representing you and you're a buyer or whether I'm representing you and you are a seller. before we get questions from you, these are some of the most frequently asked questions. And so buyers have these questions. Sometimes it's a yes and sometimes it's a no. So on refinances, this is most common for them to ask questions about when should they refinance and all that. Um, on purchases, it depends on the loan type and whether you're negotiating a lender credit, but closing costs can be rolled into your mortgage. But you want to talk to your lender about what's possible because sometimes, like I said, it depends. Sometimes it can be done, but it depends on the loan type and whether you are negotiating a lender credit. Can I use gift funds for closing? Yes, gift funds are allowed on most loan types. However, lenders do require a gift letter that has to be signed by the donor stating that it's not a loan and that it does not need to be repaid. FHA, conventional, and VA all have specific gift fund rules. Your lender will walk you through the documentation needed. Are closing costs negotiable? Yes, many of them are. So always ask. The worst you can hear is a no. Don't be afraid of a no. All right. So again, we talked about refinancing. I get a lot of questions about that, and a buyer would say, or at that point, it's a owner. Do they pay closing costs again when they refinance? So for the most part, it's going to be a yes, unless you have lenders that offer like 24 or 36 months. If the rates drop by a certain amount, fill in the blank, they'll do it, but you still have to pay like an administrative fees.
That
But
sounds right, but I would imagine they're still going to have title fees.
yeah,
I,
you'll still have
y- y-
administrative. Yeah, yeah,
yeah, it's just like, I mean, I can do a VA and FHA streamline. It's super cheap, and on VA for sure can almost always roll all the cost in. And on those, you don't even have to requalify, right? Like you're not
right,
no appraisal, you're not sending in income verification documents, any of that. We're just doing a soft pull to make sure you haven't been late on your mortgage. Um,
right.
but the point is, right? Like there's still title fees and title insurance and all that fun stuff. So
What about a no closing cost mortgage? There's no such thing as a true no closing cost mortgage. The costs either get rolled into the loan balance or you accept a higher interest rate for a lender credit.
not in America, not in America. So I've
Not
known
in America, right?
plenty
Yeah.
of Canadians,
Uh-huh.
and apparently they don't have closing costs. I don't understand,
Oh,
but you
wow.
also show up and put 10 or 20% down. The interest rate's like 10, 11%, and you get to refinance every 5 years. You have
Oh,
to
and
because
oh,
the
wow.
loan it's amortized for 30, but it's due every 5 years.
Oh, wow. Okay.
So yeah, I mean it's not exactly a great thing, right?
Okay. Okay. Well, we are about to end. I am all over my time, but I do want to say just a couple things. As you approach closing day, your final three rules, market conditions, rate lock expirations, or changes in your situation can impact your fees. So you want to stay close contact with your lender in the final weeks before closing. Now, I'm going to say, um, to one more time to verify wire instructions by phone every single freaking time. Okay. And then compare your loan estimate and your closing disclosure for any discrepancies at all. All right. We are going to let you know that with us working for you, you're going to be as prepared for closing success as possible. At this point, we will have come so far. And so there's nothing to do but cross that finish line, and we're going to help you do that. And we're going to celebrate closing day. It's going to be the day you get your keys or the day you walk away from a stressful sale. Sometimes it's both. But everything that we covered today is designed to make sure that you are successful at the closing table and fully prepared and confident to close. All right. So, do you guys have any questions? I know we went over a lot today. We actually ran over a lot, but we started like 5 minutes late. Does anybody have any questions? No? Yes, no, maybe so. Don't be shy. Don't be shy, people. Okay. All right. I do want to remind you that I am Daphne Brown, your broker owner of Beyond the Home Realty. We get together every Wednesday, just like this at 7 p.m. sharp. Okay. All of our information will be located in the description of this video, but you do not have to wait till Wednesdays to call us, contact us, email us, text us. You can do that at any point in time. We want to remind you, though, that we are your homegirls and we are always ready and willing to enable you to find your way home. Till next Wednesday, guys. Bye. Don't forget, we've created a playlist that holds all of the past Wednesday webinars. Check it out here.